Welcome to today's webinar, courtesy of the Kentucky Small Business Development Center right here in Louisville. We're all about hooking you up with free, super secret business coaching and training services. It doesn't matter if you're just dipping your toes in or gearing up for a big expansion. We've got the goods, the tools, and the know-how to help you win. To get the scoop, cruise on over to LouisvilleSmallBusiness.com or hit us up at 502-977-5800. Big thanks for tuning in to today's webinar. Feel free to drop your questions or chat it up with our speaker using the chat feature. Let's dive in.
Hi, welcome everyone. I'm Dave Atkin. I'm the director at the Louisville Small Business Development Center. Thanks for joining us on this nice Tuesday evening. So happy that you guys have joined in. As always, just because we like to do these sort of things. First, I'll introduce my my good friend and coworker Janet Flaw, who's going to be running things behind. Everything going back there? Okay, back there, Janet?
Yeah, we're doing good. Good evening, everyone.
Okay. And if you wouldn't mind, just look at the bottom of your screen there. You'll see a toolbar. And if you don't, just take your cursor and hover over that. It should pop up. There you see the little chat button. You wouldn't mind clicking that just so we know that you can see and hear us okay. If you wouldn't mind just typing hello and where you're joining from so that we know everything's working well. We're kind of all working remotely today. And so we just want to make sure that everybody's with us. So there's Lisa from Louisville. Thanks for joining us, Lisa. Yeah, here in Louisville, it is partly cloudy. It's kind of cold. Had a little bit of rain. It's a little windy, but it's a great fall day. Have a nice hot cup of tea. Kind of enjoying the weather. Hope you're doing the same. Shanitha of Oldham County. Hello. From LA. How are you? I think you get the distance award today for sure. And then Virginia from DC. Wow, you guys are on the opposite ends of the world today. That's fantastic. So thank you, thank you, thank you. AJ, how are you? I haven't seen you in a while. We need to get caught up. Hope things are going well. So, as we go through everything tonight, if you have any questions or comments, just put them in the chat and we'll either stop our presenter and get her to answer that question, or we'll just kind of hold them to the end maybe, and then we'll just have a general discussion. But this is a great opportunity for you to ask your personal questions, your specific business questions to an expert that can really give you some good answers. So, hey, Dave. Everybody knows Dave Sauerbach, who owns the Sauerbach Family Drive-In in LaGrange, Kentucky. Thanks for joining us again today, Dave. So I'd like to introduce our presenter tonight, Sheri Radler, who is such a great resource. And she is an expert in all things numbers, bookkeeping and taxes and whatnot. And she is going to help us really learn how to analyze our year-end balance sheet, get things ready for next year, and get things set up. So, Sheri, how are you this evening?
Hello. How you guys doing? I'm coming on. Oops.
There you are.
On. There you go. Hi, everyone. Hi, Mr. Sauerbeck.
So, yeah. So again, think about your questions. If you have any questions, Sheri's the person to ask. So, Sheri, I'm just going to turn it over to you, let you get going here, because you're the star of the show tonight, and I think we have a lot of questions for you.
Okay. Well, thank you, everyone. Thank you, Dave and Janet, for having us, and thank you, everyone, for showing up. And today we're going to talk about the what's and whys for looking forward to wrap up our year. Because imagine this, you've actually built a successful business. You're in demand, your team is thriving, customers are happy, everything is working wonderfully until an unexpected challenge arrives. Maybe it's a market shift, cash flow, your top employee leaves, or a new competitor is opening across the street. And how prepared are you to navigate these waters? Because the difference between businesses that survive and those that thrive really lies in the ability to plan ahead. It's about being proactive, reactive. You're ready for challenges and opportunities that come your way. So today we're going to dive into this topic that could help make or break your business's future, the financial planning for growth. Because it's not just about having a budget, it's about creating a roadmap to help that every decision you make helps align with your business's long-term goals and success. So we're going to explore a couple practical strategies on these finances because in the end, it's not just about surviving, it's about thriving and setting your business up for growth. So let's go ahead and dive into this. So I'm Sheri Radler of our accounting group, and thanks for having us. And whether you're starting out or looking to expand, having a solid financial plan really is crucial for navigating the business landscape ahead. Here at our accounting, our premise is focused on the numbers driven by results because we try not to just look at the historical financials. We like working with our clients to shape their prosperous future. We dive into their financials. We discuss with them their plans, their goals, and their hopes for the future because our goal is to drive those tangible results in their business that will align for that lifestyle and what they're wanting personally.
Sheri, if you're sharing your screen, it's not up.
Oh, well, then that's just
Want to
terrible.
want to make sure.
That is terrible because yes, I am sharing a screen. So sorry about that. There we go.
There you go.
So yes, guys, we've not missed much, but started. There's me. And then, of course, we're going to talk about the content today because we all have heard that there's two sure things in life, death and taxes. Well, for accountants and business owners, honorable mention really goes to year end because a lot needs to happen in a really short frame of time to wrap up the year, wrap up your business, and get started strong for the new year. So today we're going to discuss 4 areas of our business that you can start reviewing now and through the year end as you close out your year. So books analysis. Running your business without correct financial information is really the equivalent of flying blind in your business. And surprisingly, to me at least, is how many business owners tell me that they do just that. They don't reconcile their books. They don't review their numbers each month. They don't know the cost of offering their services to the customer or how much monthly overhead funds they need to operate their business, their monthly runway. So a book's analysis is really important to offer the business owner that insights into the numbers of their business. Because as I said, it is so shocking to me how many business owners I talk to when they're like, oh yeah, I just never even look at that stuff. And it's like, how? Why? Because this information is giving you the data that can help you drive into actionable intelligence to allow you to make informed decisions in your business. And in order to get accurate picture of where you are, you first have to understand where you're at and do a financial review. So we're going to make sure that we can trust that the numbers are correct and that the information is valuable. So first of all, you start by looking for errors evaluations. We want to make sure that the information presented is reliable and accurate. You're keeping an eye out for overstated revenue, maybe liabilities on the balance sheet that's lingering after the bills are paid, any negative numbers that should not be there. So this is what you're looking for when you're looking for an error evaluation. Accounts reconciliation is something we deem as critical. Every bank, loan, credit card account should have an independent source document each month, a statement that allows you to reconcile against that statement, recognize the principal and interest movements, and allow you to have the confidence that the information on your balance sheet is tied out properly, nothing is duplicated or overstated. Uncleared transactions occur when something is recorded in your books and for some reason or another, it does not clear the bank account. Sometimes it's just a mismatch. It went out of one account instead of the one that was deemed, and the duplicate was not removed. And something, it is just something further to investigate. Maybe it went through on a personal card that that employee or business owner needs to submit an expense report on. But understanding what is in your books that never cleared helps you find those errors, manage your cash flow. We're looking to prevent overdrafts and just keeping an eye out of how money is moving through your bank accounts. Entry correction is how the information was recorded in your books and making sure it is recording into the proper area. Maybe you have multiple revenue accounts and making sure that the correct sale is recorded to the right revenue bucket, that expenses are being captured in their right categories. It's on the P&L, so maybe your bottom line is correct, but if you're evaluating expense buckets or accounts, making sure that the entries are being recorded properly is someplace you can look at this. You might also identify missing entries at this level. Maybe as you're looking across your profit and loss, you may notice missing information or missing entries at this point. Writing off expenses is more an action area for your tax group, but it's all about reporting the entries into your QuickBooks or your system properly so that your tax group can pick up those deductible expenses very easily so that you pick up those tax write-offs during your return. And of course, one of the things we're going to look at every year is our accounts payable and receivables. Do we have items on our books that need to be paid? Are we holding on to bills by accident that needs to be paid? What about uncashed checks, those unclear transactions that maybe you thought were paid and for some reason that check has never been cleared? Accounts receivable is the flip side of that. If you have billed your customers and they have not yet paid you, we'll want to follow up, deem whether this item is collectible and whether or not any type of write-off should be done at year end to make sure you are properly recording your position. So once we've built out this data and we've determined that we can trust the numbers that it presents, it's time for us to analyze our business and understand where we are. And the trinity of financial statements is your profit and loss, your balance sheet, and your cash flow statement. And together, these work to provide you a complete picture of your business performance through that period of time under review. It's a critical practice for businesses to review these kind of statements. They provide information on financial performance, trends, the health of your business, as well as showing whether or not compliance is being handled, especially if you're seeing any kind of payroll liabilities or sales tax liability building up on your balance sheet. You probably have an obligation to forward those payments on, and we're going to make sure we're in compliance with that. Using these reports allows you to provide an analysis of your financial health and review the activity of your business. They help you understand if you're profitable. If not, where'd your money go? They help you stay aware of rising costs sneaking up on you. Maybe increased costs of supplies or people are shrinking your margins, and you pick that up on a gross margin analysis. Reviewing your recurring or automatic charges that go through your books is especially important. Make sure we don't have a subscription or some kind of recurring charge going for a software or an item that we're not truly using anymore. And, we all have this, personal and business, but that is really a dangerous place where money can get left on the table. It's also a great time to review our inventories, not only for an inventory count for a property tax return filing that's going to be due early in the year, but let's look at the inventories and see what is sitting on our shelf. Is anything obsolete? Is it non-usable? Is there anything that needs to be removed from the value of our books from a lower of cost or market or a write-off position? Looking at this inventory also allows you to realize maybe if something has been damaged and needs to be repaired or replaced. Do we have any products that need to be reviewed or removed from our roster of items? And what about our supply reordering levels? How did that work for us this year? Did we run tight on getting that next set of delivery? Do we need to expand our ordering times? None of these are reviews that are one-time only things, but by putting on an annual calendar here in this last quarter, you're setting your business up to make sure you're doing this kind of annual focus into your business at least one time a year. Because understanding how our business runs, it impacts, of course, the profitability on the bottom line. And when the truth comes down to it, there's only three ways of improving that bottom line. We raise our prices, we sell more, or we spend less, reducing our expenses. So everything we do in our business is tied to that mindset. And of course, the more on top of it and the more we capture and the sooner we realize that these trends are happening, the sooner you can address them and reverse them or, address them within your organization. And beyond the financial numbers, there's a bigger component to reviewing our business. So one side of this is our annual HR review. We want to make sure our business continues to run smoothly and efficiently. So both businesses and individuals have to understand the financial aspect and impact of the human resources into the business. So HR data helps us inform information on budgeting, cost control, project allocation, compliance, and all things various decision related to staffing, compensation, and benefits. All of these areas play a role into the financial health of our organization. So, and on top of that, we have this ever and changing landscape of employment laws and record keeping requirements. So again, developing some kind of internal process and practice to ensure that at least once annually you are reviewing all of these aspects helps you protect your business overall. One aspect of what we're going to have to look at is assessing our staffing needs. We want to align our workforce with our budget, our strategic plans, our operational requirements. We want to make sure we have the right people in the right roles at the right time. And all of this is vital for the overall success of our organization. So as you do assess where you are, always remember that it is here, but it's also looking for the upcoming year and longer range planning. Do we have enough staff to meet our current needs? Do we have enough staff to meet our forecasted needs in the upcoming next few quarters? Do we need to decrease staff, modify hours, lower overhead? Do we need to reorganize positions within our group to better utilize skills or to shift people as we've shifted operationally? Do we need to shift who is in different roles? All of these help you capture this in a financial numerical format because these increased staffing needs are going to impact our budgeting. But beyond that numerical, consider the ROI on your hiring. What does it cost to incorporate new people onto your team? What is the cost of software to get them on? What is the ramp up time to get them training and actionable and actually a member contributing to the overall aspect of the organization? Different industries have different environments. Maybe there's specialized training for new processes. Is technology impacting your personnel? But all of these kind of things are what you want to mix up in that hat and think, what do we need manpower wise as we move forward into this fresh year? And along with that comes assessing our compensation and benefit packages. We want to make sure we remain competitive, cost-effective, compliant with all those legal requirements. And this also plays the vital role of helping maintain and retain your employees, attract talent into your organization, and maintain a motivated and satisfied workforce. One thing we always advise, evaluate your position compared to the market. Are you competitive to the market in your area? Are you still feeling the impact of some people? Industries have really seen an impact of personnel. One of the things we looked at in prepping for this was employee feedback, and data is still showing that 30% of polled employees are still saying that they are willing to trade jobs in favor of one or a combination of higher pay, lower stress, flexibility, or better benefits. 2025 predictions, our salary increases are going to be in a range of a 3.9 to a 4.5 percentile. So these are all things, again, to put into your mix. The mindset and shift of the world, the conscious capitalism embraced, has really caused both employees, and consumers to opt to choose companies that prioritize people over money. So making sure you treat your employee well not only helps with your maintaining your workforce, but your positive reputation of the company within your community. Almost 2/3 of workers are still ranking flexible work hours. I'm sorry, went just a little too fast on that one. Our ranking on flexible work hours is highly important, with almost half saying that staggered or flexible work schedules are a major change that employers are adding or embracing within the organization. Almost 90% of the workforce is indicating that benefits such as health insurance or PTO reflects that the company is investing back into their workforce, and that is something that they look for in an organization. So all of these help you both within your organization, your workforce, of course, your reputation in the community, and will impact your financial health as you set that up. Incentivizing. Incentivizing does not solely have to be a monetary consideration. And both monetary and non-monetary aspects can help reward your team members for their hard work, maintain the motivation, and keep them engaged in your company culture. We're trying to engage them for higher job satisfaction, improving our retention, and all of this will lead to an enhanced overall company performance. Incentives can be both monetary and non-monetary. Scheduling incentives is one that has proven to lower stress levels and positively impact mental health. Monetary incentives can increase staff engagement, but business needs to balance that against the fixed costs that they take on, because you're going to have to absorb and sustain that monetary impact. One of our recommendations is always to try to tie that incentive back to a company goal, so that we have the entire team working to an overarching company objective. An example of that might be summer hours. Hey, if by May we have hit XYZ target, we will reduce our summer hours overall. So again, it is a win, and they get to succeed and achieve that goal together. So that also helps you with your team collaboration. Any questions before we go into this next section? Anything? Okay, we'll save it to the end. So regulatory compliance, rules, laws, ordinances, they change year over year. So it is really important that businesses do some kind of compliance review, making sure that your business is up to code. A yearly compliance and regulatory audit is really essential for maintaining that legal compliance, mitigating your risk, ensuring your financial integrity, and safeguarding the reputation of your organization. It also helps promote transparency, efficiency, and accountability. Every organization, regardless of the size, should ask themselves two questions. One, what are the key compliance issues that if we violate could put us out of business or severely set us back? The next question is then, what are we going to do to make sure we don't do that? These two questions really sum up the core of what a compliance risk assessment is all about. Just like a routine physical or an auto mechanic, you really want to, it helps you spot the weaknesses and areas that may cause trouble down the line. And before you can really assess whether you are in compliance, you really need to know what are the rules and regulations that apply to you. And some industries do require more compliance than others. General places to start are your tax documents. Your tax documents are going to let you know what state you are reporting taxable income in. So right there, you know what states are applicable to your world. Look at your W-2s, your employee paperwork, your health and life insurance documentation, education reimbursements, transportation subsidies, all those kind of HR policies that you have that can be impacted annually by the IRS regulations and rulings. So you're going to want to make sure you've updated those. Your 401k matching and filing and reporting, those have annual obligations and reporting on those. Annual reportings to those states that you are reporting in, not only for the state working, but payroll and other accounts, as well as additional filings that you might have. It's really surprising to us how often we go to the Kentucky corporate website and find out that a potential client has been administratively dissolved just for neglecting to file that annual report that is a cost of $15. As you go into other expansions of your industry, you might get into operating licenses, health licenses, professional licensing, and making sure that all those are renewed and registered accurately is critically important. Last year, we had a client that failed. They have a security and safety industry. They failed to renew paperwork properly in the state of Ohio, and their penalty was almost $90,000. So these states are not kidding around if you fail on one of these things. So understand that it's really essential to ensure that the documents are accurate, complete, and comply. We want to make sure that if we are spending money, it is money that we are budgeted and planned for, and we are not just giving it away for neglecting to hit a random deadline that the state imposed. Audits. Audits beyond what we've talked about, but going into our cyber and our IT, conducting an audit on your website. Do all the pages go to a live set? Do you have any broken links? Cybersecurity evaluation, employee access. All of these are areas that we want to make sure that have been reviewed because, again, compliance and efficient operations. All of these help protect sensitive data, mitigate the risk, and maintain your customers' trust and confidence, because a failure in any of these could indicate that something has happened, and no one wants to have to send one of those letters to their customer group letting them know that there has been a data breach. So, website, is the information up to date? Do forms and links still work? Cybersecurity, are all your employees trained on phishing schemes and cybersecurity, bad actors, and what the current practices are that they're trying to get to us? Access, making sure that only the right people have the right access to certain files, folders, client accounts, especially as people change roles. we'll often go into like a QuickBooks file and find old employees listed there, or go into a 401k file and old employees. It's just how, someone has left the company and they've just not been disengaged from a software somewhere. And now that we've looked at all these areas, we want to look at our performance and goals, because we want to promote personal growth, accountability, motivation, and adaptation. And those are the kind of performance and goals conversations we want to have with our team. At an organization level, we can have that same kind of conversations with ourselves. We want to support our performance evaluation. What is our alignment with our strategic plans? Are we budgeting, planning long-term to support those goals? If you're thinking that you want to build a building in 3 years, well, that doesn't start the year you want to build it. That starts 3, 4 years now back as us talking, planning, budgeting for that, and figuring out how we're going to make that happen and cross that bridge when we get there. So we want to make sure these reviews are essential, because that long-term success is just that. It's a long-range plan. It's a long-range game. So we have to start now. As you go through this mindset, one of the groups we like, if anyone's familiar with Simon Sinek, he's a motivational speaker, he's an author, but he has a great book that says Start with Why. And in it, he is really breaking down that he believes business owners should understand their why. Why are you doing? What is your long range goal? And one part he says that I really like is that our goal is not to win every battle. Our goal is to outlast the competition and stay a viable entity. So, and this becomes part of it. So understanding yourself, the question of why ensures that you are value led and that you make value based decisions. And we want to go with that. Part of our annual that is a business review, and that allows us to do a process and a walkthrough that will provide us with some insights, decisions, and information as almost like a scorecard. Are we on track to meet our objectives? It's a critical management practice that we really like to do annually with our clients, because at the beginning of the year, if we have set goals and budgets, of course, during the year we've talked about it, but this is almost like an annual report card for us. It's based just like a SWOT analysis with it. What did you set out to do? What were the goals that we set out? So let's pair that with a little bit of feedback and KPIs on what happened. What challenges did we face? What skills did we learn? What did we do? What mistakes did we make that we can avoid making next year? What did we do right, and how do we repeat that 100 times over? So that is part of that revisiting and understanding where you started out going, and then at the end of the year, looking back and evaluating where you went. This is also one of those things that as a business person, you may always be looking at that forward to-do list and feel like you are always scaling that mountain. This is a great time to look backwards and realize how far you really did come this year. So never forget to look backwards. So second, we want to look at our business. Every business offers a product or service. So now's a good time to understand the fundamental process of how that goes. Do we need to expand? Do we need to dive into the core of our business? Are products still on growth phase? What are the services we provide? What is our competitors doing? What is the industry doing? Do we need to modify, adapt, adjust? Just like a Marine Corps, we will overcome. Step 3, it might actually be the most important part of the review, because we're going to evaluate where we stand monetarily at the end of the year. And while it takes time for every good business to begin really turning that profit, documenting your progress is essential. Cash flow, cost bases, financial growth, margin percentages. Those kind of KPIs are the metrics you want to measure yourself against ongoing. End of the year, you grade yourself, and then you set new goals for the next year. We're going to crunch the numbers then. We're going to look back at the annual. We're going to find the red flags. We're going to figure out the hard to track successes that you may not have realized when they came. And we're going to highlight them and make sure we're aware of them and promote them forward. When you first went into business, part of your business plan probably involved a competitor analysis. Well, now's a good time to review that data. While much of it may hold true, let's find out what has happened, has changed in the industry since your initial analysis, especially with technology. In the accounting industry alone, where I live, the implementation of AI is really, they're saying in the next couple of years is going to have a real impact on how we process day-to-day transactional data, those bank feeds and things like that. So as you look at this, we have to look at how changes are coming that, okay, what we do now may not be how we need to go continue doing it. Remember, Blockbuster was once a very successful company. And then we're going to lay a framework for the new strategy. We're good now that we have a grasp on how your business has gone over the past 12 months. It's worth looking forward and developing strategies for things. We want to we want to set realistic financial goals. We want to understand what those goals are based on. If you're saying, hey, I want to double my profits next year, well, that's great. How are we going to do that? I want to reduce my expenses. That's great. How are we going to do that? Because those are very easy statements to make, but you have to dig a little further under them and understand how do you make that go. Look at, potential upgrades, solicit feedback from your team and ask them what's not working, what they need to make their job easier, increase their productivity. In our firm, we call it smoothing the humps, the potholes. It's like, where are we getting stuck? Where are we hitting, bumps in the road? And those are the areas we want to smooth out and streamline. And then, of course, not everything is monetary. So what are some of your non-financial goals? What are some of the values that drive your business forward? What are some of those non-financial goals? Maybe you want more client engagement or positive reviews or feedback, but find ways to weave those mindsets into your business model as you lay it out for your new year. And then that final report card, you got to determine, did you meet your goals? So evaluating the performance is determining how did you measure up. If you met your goals, how? What was the driving factor that allowed you to meet them? When did you achieve them in the year? Should your goals have been more challenging? Were the smaller targets met on time? So those are areas, great, you met your goals, but let's look a little deeper into how we got there. If you didn't meet your goals, same type of questions. What were the drivers that prevented us? How close were we to it? What needed to have occurred to have make that happen? Maybe we didn't meet that goal because we lost that key customer or that key person. Okay, but it's like understanding the why, both in the success or not quite a success, is definitely something we want to do. We want to look at our previous goals. Those goals that we had, are they continued? Are they completed? Should they be carried over into the new years? Is this an initiative that we're going to maintain going forward? Should our goals be more or less challenging? Did we overstate our position? Did we lay them too easy or did we lay them too short? We want to look and understand what goes into creating a goal. Goals are both short-term to be achieved within the next 12 months and long-term. And as a business owner, you should be looking at a 3 to 5 year planning. 1 year by month, 3 years, really solid, maybe quarter. And then 5 year, you really just need an idea on the horizon of where you're going to. But they have to be SMART goals. Smart, measurable, achievable, time sensitive, and relevant. Or flip those around. And then you lay out those goals and targets. Hey, our goal for 2025 is. Okay, well, now have we broke this down into quarterly or measurable roadblocks and roadmap it out of when we're going to measure it? How are we going to gauge it? How are we going to determine? As an accountant, one of my favorite books that I found in recent year is the 13-week year. And it has nothing to do about numbers, but it all talks about breaking down goals into 13-week bites of the apples. And as an accountant, that aligns with our quarterly business cycle. So I love the way they laid that out. Really a great if you're interested in that kind of thing. We wrap it all up with a budget. We create a budget for our tax strategies with our tax. We're going to promote our effective financial plans, roll them into new year plans, and just present it out and say, okay, with this new year plan, we have financial control. Everything we
I think we've lost Sheri.
Yes, she's definitely froze up, I think.
Oh,
Yep.
completely
she is.
gone.
Yep.
And give her a second here.
Yeah. She should be back hopefully in just a second.
There she comes.
Realize. Here we go. Yeah.
You're on mute, Sheri.
The power flickered.
Oh, there you go.
Okay, sorry about that. So I think I lost you right as I came to budget.
Yes, you did. You'll have to
Okay.
start right there.
So really, this is where we wrap it up. We want to evaluate our current strategy. How well did our strategy work? Consider how it impacted us and understand the strategy we want moving forward. And this really is how we walk through the mindset with our clients of wrapping up the year, looking at where we're going. We're sharing a nice QR code here. If you want to download, this actually gives you some information on how developing some of these strategies and a summary of some of these practices.
You'll need to reshare that, your screen again.
Oh, well, look at that. Coming.
No, not yet.
I'm coming. I got to get to that.
Okay.
I had to kind of you had you covered up. Okay, hold on a second, because there we go. There you
Yeah,
go. You
on the
covered
budget screen.
kind of thing. There we go. So yes, we're going to just make sure the strategy we worked with this year still works for the strategy we want to go forward. If not, now's the time to adjust. And we're sharing a year-end guide of just some checklist and insights that you might find helpful as you go through it yourself. So, and really the idea is remembering, that with the right financial plan, we can shape a future that's not just promising, but it's predictable. And as an accountant, that's kind of what we are. The idea is we want to help our clients. We want your businesses to grow, but we want you to understand and, you're the one holding the reins. You're planning ahead. Nothing is too surprising on you. And that's it.
That was great, Sheri. So if you have any questions or comments, now's the time to jump in the chat and put them there, and we'll talk to Sheri about that. But Dave does have a question. He asks, "What are your recommended financial ratios to follow, regardless of industry, that reflect business health or a risky future?" That's a good question.
Great.
That's a really good question, actually.
That really is. There's a couple that are just really good benchmarks to use. One is a liquidity ratio. And while it's more formal, but it's basically saying how much money do you owe? What is the total liability that you owe? And for a quick liquidity, it is our current liabilities, our credit card statements, current loan statements, versus how much cash do we have? So, we obviously want to have $2 to $3 of cash for every dollar of debt we have. So that's in every industry has a little, but for our goal, we're going to be pushing our clients. We want at least 2 to 1. We like a little closer to 3 to 1. Good reserves. When you have your operational, it's called a burn rate. If you did not sell anything today and you had to buy no raw materials, so it's not revenue and it's not COGS, but it's your expenses to keep the light on and pay your bill is your burn rate. You hopefully have a couple months of that burn rate in your bank account also. A third one, Mr. Sauerback, would be, so we talked about our liquidity, which is a balance sheet ratio. A third one would be our financial ratios on our profit and loss. And our rule of thumb is, and it's just a general dirty rule of thumb, that as a business owner, you're hoping your bottom line is about a third of your gross revenue. As a corporation, it gets a little lower. But I mean, we're looking for, upwards of 20% on a net income margin, is kind of our goal. $20 out of every 100, we're hoping flows to the bottom line for the organizational's use beyond. We'll target for 30, we'll start you at 20. Anything below that, we're kind of on a fast track because you're working on a break-even business.
Thank you, Sheri. Just a quick add-on to that. You were talking about the performance measures and stuff, and some of the other things. And a little bit before that, with the employee performance plus the financial performance. Do you like using like some dashboards that everybody can see? And if you use individual dashboards for your employees, do you find that like kills company culture, or does it help with performance? What's your whole philosophy on that whole thing?
I came from big corporate, so we were flashing dashboards like on day 3 of close, and we still use dashboards with a lot of our clients. Internally, some of our metric dashboards, I mean, I think it's really critical when you're doing from an employee perspective, it's got to be a team measurement. It's got to be an organizational measurement. We're all on the same team. This isn't Lucy versus Larry. So we, hey, our goal is we get summer hours if we as a team hit this operational goal. This isn't a personal kind of metric, is a big one for us. Of course, everyone has personal goals as part of your personal setup, but that is a little more private, at least for us. It's a one-to-one kind of conversation.
Yeah.
There's a couple really good dashboard tools that
Mhm.
are very complimentary or free. Cashflow Tool is one. They have a free version that
Okay.
if you're looking to know like how many days cash you have on hand or what your burn rate is or things like that, they have an entirely free platform that gives you, I think, like a monthly cash flow.
Nice.
So there are some good dashboards, but it's everything we're talking about while we're coming at it from accounting. It's not totally numbers.
Yeah. Let's see. Shanitha asked about the presentation. Yes, we'll be happy to send you one, or everybody will get one tomorrow, plus the recording. Lisa asks, what is the best platform to do a profit and loss statement? Is QuickBooks the best way to keep up with everything? Income and
Um,
financials, or I heard you mention QuickBooks.
so we are actually a QBO centric firm. So we are a QuickBooks focused firm that we use QuickBooks as our financial hub. There are other softwares. So my recommendation to Lisa would be you would want some type of profit and loss software. Excel can do you dirty, but you can get a simple start or a QuickBooks very cost affordably. There are some platforms like Wave that have a free version that can give you the rough out of what you need for a profit and loss. And of course, a profit and loss starts with your revenue minus expenses minus costs, or excuse me, revenue minus COGS minus expenses equals.
So Sheri, you were talking about at the very end. I feel like when your presentation goes, there was like a sequence of things that you should go through, but the very end, the very last thing was budgeting. Is that is that what you would do last? You would set up the budget after you do your all these other steps and reviews, then you would do the budget for the upcoming year?
Truthfully, yes and no. We are starting our budget process, which is why we're putting this out right now. So for many of our clients that we're working on their budget process, we're doing this review because we have to know these answers to plan for next year. Are we in compliance? Are we in new states? Are we expanding our footprint? Do we need more team? So all of those are the decisions we have to ask and get answers to build out that budget for next year. So we're kind of looking backwards and grading ourselves, but we're taking all that information to drop it into, okay, well, based on that, from where you were, this looks to be the adjustments that, the new budget.
Um, so we have some minutes left. So I'm going to ask you this question. What's your process for budgeting? Walk us through a few steps.
Okay, so what we do for our clients is we run a report out of QuickBooks. And so we have run a 2024 P&L. We've exported it to Excel, and worksheet 1 is you have your 2024 information by month. So you know exactly by GL account, by month, where your money is going. We'll give you a second one that is a rolling 12. So it's last quarter 23 through Q3 of 24. So you can just kind of see what you spent in Q4 of last year to give yourself a baseline of what might be coming. Worksheet 3 is set up to be the new year, still 12 months, but we take out all that data for GL counts, leaving the formulas, and we give you a blank template that you can start playing with by GL account by month of what is this. Now, a lot of our clients take our model then and think of your your P&L. Your top line is revenue. You might have 3 or 4 revenues. They're going to probably open up a new tab and make it revenue, and that's their work paper. That's their scratch paper. How did you get up to that? You're going to make $80,000 a year or a month to get to $1 million. So that's their rough out. Hey, in March we're going to get XYZ contract, and in September we're going to lose XYZ engagement kind of thing. So that they can add out as many work tabs as they want, but ultimately we're going to be bringing those total numbers back to that GL platform. We'll then upload that when we're final. Everyone agrees, their management team agrees, everyone's on board with it. We'll put it into QuickBooks for them, and then going forward, every month they get a report that gives them their actual versus budget information. And we recommend that quarterly they're sitting down as a team and they're holding themselves to those benchmarks they set.
Great. Yeah, that's a great setup is where you benchmark the budget. Um, uh, uh, so
Well, if you're not going to benchmark it, don't bother doing it.
that's right.
It's an exercise in futility if you're never going to look at it.
That's a great point. Exactly. Um, you mentioned a trailing 12. Do you find that helpful or do some of your clients find that helpful to look at every month to look for trends that way, like a horizontal analysis?
Some of ours do. Some of them want the trailing 12, and QuickBooks doesn't really give a good trailing 12. So we are moving to like an FP&A software for those type of clients.
I see.
It's the next layer on.
Okay. I have one more question. Looks like everybody's kind of quiet out there, but I'm going to ask another question. So you mentioned more or less an IT audit, with the website and cybersecurity and access. Are there tools or apps or things that you generally recommend people use when they do this sort of scan?
I don't have it, and I would have to look it up because we worked with our IT group. So we're putting our team through, like, they get these random emails that are phishing attempts. And if they click it, it kind of like pops up, big raspberry, you goofed kind of thing. And it explains how they goofed. there's not a software that allows you to do the evaluation of QuickBooks or your softwares to see, do you have wrong users in? That's more of having a solid SOP and workflow. How do you onboard employees? How do you offboard employees? How do you onboard or offboard customers? Because if you're attaching them to softwares within your system that you're paying for by the license, you definitely want to make sure you're capturing and cleaning those out regularly.
Yeah, this whole IT audit is something that, I mean, I'm guilty of it. It's something I rarely, if ever, do. But this day and age, I mean, is so critical with like the hackers and criminals just targeting smaller businesses because it's an easier
They
pick.
really are. I mean, you're right. They figure that the smaller business doesn't have the protocols, they've not got the training, they're more likely to do it. But it also shows the smaller business is likely not going to survive a year after a hack.
Yeah, yeah,
So, I mean, we are the most at risk, and this is our livelihood. And yeah, I mean, it used to be that saying, not knowing the law didn't excuse you from breaking the law. It's the kind of that same mindset.
hmm very true.
Yeah.
Well, Sherry, this has been very helpful. There's a lot to do here before now and the end of the year, I think, right?
It is, and it's also a good practice. You have some kind of operational calendar. This is the type of stuff you put on at least once a year. Hey, did we run our stuff through HR and find out, are we legal? Because different states are adding stuff. Connecticut just added like a mandatory FMLA requirement. And
Mm-hmm.
if you got an employee in Connecticut and you're just not keeping up with what's coming, you're in violation before you've even realized it.
Mm-hmm.
And these things are amounting to some huge fines. I mean, we've talked before, second to financial malfeasance, it used to be that running afoul of HR was like the fast track to crashing your business. Well, now it's everything. It's HR, it's cyber, it's all of these things are, I mean, they're all out there trying to get you.
Yeah. Well, Sherry, tell me if you notice this. Like if I do a review like this where I'm, scanning things, or I usually come up with at least 10 ways to improve the process and have ideas to grow the business. So it's not like you're wasting your time just looking at stuff. I mean, you find that too, don't you?
Yes, 100%. And especially if you're a business owner, going deep in this, you see stuff that, I mean, it's not that it's right, it's not that it's wrong. We're not looking at it like that. But
Mm-hmm.
so often you end up going, oh, I didn't know it was doing that, or oh, I didn't know
Yeah,
we were still paying that, or just something like that, that you learn something, you kick over a rock and you find something in your world.
exactly.
Um,
So,
PCI compliance testing, Mr. Sauerbeck. So PCI compliance is like an FTC ruling and regulation, and it mandates the safeguarding of customer payment information, bank information, credit card information. Um, so as a business, we are not supposed to be maintaining that information in non-secured methods. In QuickBooks or many payment applications, you can put that in, it is saved, and you were all familiar with something being masked. It's XXXX, and you only see like the last four digits. So when something is PCI compliance, it is masked. So go through your folders, don't save anything on a file that has not been redacted. If you use Adobe, one of their tools, it allows you to redact documents, highlight those things, turn them black before you save them. You don't actually have to pay for a PCI compliance policy or something like that. It's an internal, but yes, for about $150 a year, you can have a PCA compliance testing of some kind. You can also work with your IT group and ask for a penetration test, which is always an interesting finding. And they test and they tell you how many passwords have been reused and how many people have things saved on their computer on your team. and things like that.
Mhm. Yeah, we have one more question from Sue Min. As a small business, I personally handle all data and transactions, but I do have an employee using my Wi-Fi system. Would I need to worry about cybersecurity for my employees?
As an entity, you definitely, that's not a problem. As an entity, you need to have an organizational level cybersecurity policy outlining what your employees are and are not allowed to do on your Wi-Fi, your router, your hardware, under your name. And, we're probably familiar that back in the day, don't go to dirty sites, don't do those. But now it has evolved to the proper use of AI, what they can post on their social media page about your business or your clients, things like that. So it's all definitely a good discussion to have. Don't, never log in remotely from a coffee shop or something like that. Be careful of where like if we were at a coffee shop, our people could be doing social media, emails, and training. If we caught them logging into a client data sitting at a coffee shop, we'd probably chop off their head, you know. But
Yeah.
we use Solus hotspots for our people, so they're not getting onto an open Wi-Fi. So
Mm,
again, that kind of thing. So it's using open Wi-Fis.
yeah. Just to add up.
Confidentiality
Yeah.
agreements are definitely something. Our people, we have ownership of work. We have confidentiality agreements. We have understanding a separate confidentiality agreement, understanding that they're seeing customer data and they understand that that also is confidential. You
Mhm.
know?
Yeah. Just from my personal experience, the other thing that doesn't get discussed a lot is, well, you kind of mentioned it with who has access, but um, different passwords and things. My story is I'm, I got my bookkeeper really angry at me one day, and she walked out, and then I realized she was the one that had the password to the QuickBooks, and I had a heck of a time getting back into that. So, understanding who has admin rights to things, it should be you. And then on top of that, I've tried after learning this the hard way is that even though I have admin access, if something was to happen to me, not like if I died, but what if I got hurt and I was out of commission for a while? I need someone that has that information that might not even work for the company, that can get the right people going, get things going, launched back up again. So that this whole thing about passwords and access is something that's so simple that you never think of it until something happens, and then it's a big deal.
It really is, because you're totally right. The wrong person falls out, and all of a sudden, like we can't approve a wire to go out the door. We had a client a couple years ago, and it wasn't our client, so it was a business that we ended up talking to. What happened? So the gentleman passed away during COVID, and he was 80 some years old, had run his business forever. And they actually had a couple weeks there because like nobody was legally allowed to sign anything. So we were
Mhm.
doing because they called, I knew the accountant over there, and she kind of called with like, what do we do? And it was like, okay, duck, keep running payroll through ADP because he's like, just like duck. And like the CPA had a POA on file, but it took a couple of weeks before they could get money going back out the door again. And
Mm,
due to the fact everyone was on direct deposit, we were able to keep payroll going. Maybe we shouldn't have, but we did, but it was like keep payroll going. But everything else was a couple weeks,
yeah.
had to get his kids in there because no one, I mean, it took a couple weeks to get the paperwork straightened out enough that someone could write vendor checks and sign off on documentation.
Hmm. Wow. Let's see. Lisa says she's having trouble with your QR code. Um, if
It
let's
worked for me earlier. Hold on a minute. If that's the case, I will scan it, download it, and drop it into chat here. One moment.
Dave, did you get the one Q&A?
Oh, I did not. I'm sorry. I'm so bad about that.
Yeah, I got
s-
it. So
okay.
let's send it over and I'll drop it over.
Okay. Sherry, so we have a question here. I started my business, and at that time I used personal credit cards since I didn't have any, I guess, any credit for my business. How should I report this?
If you're using personal credit cards for your business, to her point, only when you have two options. You're either going to treat this as an expense report, as like a loan to the business, and the business owes you back. You can put a bill, it's an accounts payable, the business repays you. You can put a loan, it stays on your books a lot longer, the business repays you. Or you can treat it as a contribution. It's an equity position. You spent personal money on behalf of the business. You're not expecting to get repaid. You've just contributed those funds to the business, and that's an equity position.
Mm-hmm. Yeah.
So,
Thanks for that.
and I will drop this right here real fast.
Okay.
Great questions. These are the kind of questions we like.
I know, it's fun.
Yes. Okay, let's try to drop that to everybody. Okay, so there should be for everyone now, this
There we go.
document.
Yeah. So you can just kind of download it from the chat there if you can jump on the
And
chat.
here's some tips on setting up a realistic budget.
Yeah.
Realistic is the key word.
That's right. That's always the rub, is the realistic part.
Yes.
So we'll give everybody a
Okay.
second to download this.
Yes.
So everybody has it. Sherry, this has been really fun and it's been so informative. I really appreciate you coming and spending your evening with us and sharing all this with everybody. This has been fantastic.
Oh, you're welcome. And I got to tell you, for us, every one of these business owners, we understand you are an expert in your field. Our mission is to help make you profitable experts.
Mm-hmm.
So
Yeah.
that's really it.
Yeah.
Okay.
Well, Sherry, thank you so much. We'll be, we're going to bring Sherry back after the first of the year and we'll get back into our regular rotation with her. And it's always great to have an expert online where we can ask these good questions.
Well, you guys have a great one. Best to everyone. Happy Q4.
Mm-hmm.
You should
Janet?
be doing your vendor transaction reviews and starting your 1099 review right about now. Who do you owe 1099s to at the end of the year?
Good tip. Good tip. Sherry, thank you.
That's what
Janet?
our firm is doing this week.
And Janet, thanks for everything. Thanks for driving the ship for us.
Sure, everybody have a great evening.
Yep.
Bye.
We'll see you next week on another Toolkit Tuesday. Have a good evening, everyone.
Bye,
Bye-bye.
guys.